I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Welcome to our last show of the year, Bob.
Good to be with you, and good to be with our listeners.
Well, we're taking a look at some of the interesting numbers over the year. They say the Canadian dollar year to year has had its best year in 4 years. The Toronto Stock Exchange, its best year to year since 2009. I didn't know we were doing so well.
Well, it was sort of stealthy, and we go back to a year ago, January, February, when you had extreme pressure on crude oil prices. I mean, they went from $1.05 or something, 105 the year before, down to the low, I think, was 26, and that was on our forecast, although we had two targets, 37 and 27, but didn't think 27 would be hit for some years, but it was a real panic. And the oil stocks and coal stocks all collapsed on that, and bank stocks were under pressure because Canadian bank stocks will participate with the oil boom. And so here we are now. That was a natural coming out of that disaster. I mean, extremely oversold. Our technicals were registering that, and we were looking for a good rally out till, who knows, May or June on that seasonal play, and then which we did get to. And then as we've been discussing it, Jim, from that somewhere around June, and as I said, we're really good on this one because looking over one's shoulder is easy to do. And there was positiveness came into the markets, and first was, and then also including the political side with the Brexit vote in June in England, which was upsetting to the establishment, but we considered that a very positive move. And then you had the Trump election, which we had that one, and although, again, very upsetting to the establishment, it was generally a positive move, especially when you have a new administration that's going to be pro-business. Hey, man, this is really a relief for the markets, and it's very good, which they have moved. So anyways, on the Canadian side performing well, which it has done, you've had revival in coal stocks. You've had tremendous rally in base metals like Teck Corp, which has base metals, coal and oil, fabulous stocks. So what started with a very good seasonal move out to May or June, then continued with this very positive vibration that went through, and and then looking at, there's an index in the States, KOL, it soared up to a spike of 14.5. It looks like right on the day of the election or the day after, because we all know that the Democrat administration wanted to shut down coal and put coal miners out of business and coal communities out of business. It was a big mission of theirs. And then now you've had this index correct all the way down to 12, and it's been recovering, sort of representative of what's going on there. Of course, in Canada, you've got the bank stocks will be financing oil patch and money, so they've done well. But the bank stocks in the U.S. have done very well with the steepening yield curve, which started around June. And that's the difference between long-term treasuries and short-term treasuries. And the curve has been turned positive for banks. We've been noting that. And then going into the election in early November, that curve really steepened. And with that, the U.S. bank stocks took off. So the banks turned out to be a fabulous play. But as with the coal stocks, and became overbought, very overbought. Then with this as well, you had tremendous down pressure on the long treasuries and long government of Canada bonds. They sold off down to what we called a downside capitulation, and it's now sort of basing in here. It could get a rally at some time, and then very late in the year, you had the gold stocks take off on a move, which I think had more to do with the going tax loss selling into the appropriate window, and then taking out that selling pressure, they bounced right back up. So it's been very positive for the Canadian, for the whole stock market, which is nice to see.
Now, one of our frequent guests, Ted Dixon, said that all these people who predict the Canadian economy is slowing because inflation isn't going up are totally wrong. He says you don't measure an economy by inflation, you measure it by production.
That's right. Yeah, because the GDP is always the final is what the or what do they call it, the implied price deflator does, and that's a lot of nonsense. I think both economies have been on modest growth paths. It will take some sort of a financial convulsion to turn or to prompt the next recession in both. Now, what you want to look for financial distress is to watch for financial excesses, which we're getting. So on the stock indexes that have been hot, some have already started correcting. More recently, the XLE, that's the ETF for all stocks in the States, is up there giving strong technical readings such that the move is likely close to ending. So, yes, it's been an outstanding year, but it's outstanding enough recently to suggest a pretty good correction. Let's call it a significant correction. That's the term we used in early July on the gold stocks when they became very, very overbought. We were then calling for a significant correction, and which took place. I mean, it was very hard, but then you had such a fabulous rally from Christmas until early July. So now there is a tendency, Jim, for at times gold stocks can go opposite to the big stocks in New York or Toronto, and who knows, we could get into that, but we're staying with the view that the gold stocks relative to the price of bullion need to put in a proper base, which it is working on. And you'd also want to have silver beginning to outperform gold. That's not happening. And so there's a number of things that we're looking for before we would enter the precious metal sector. Been a good rally, but as I said, that was more the end of tax loss selling than, I think, a lasting move. So we'd look for the lows in gold shares to be tested here over the next number of weeks.
We'll have more with Bob Hoye right after the break.
GEM International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond, recently discovered in Africa by a fellow Canadian junior, with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Bob Hoye. Bob, China is tightening up money laundering rules for their banks. Will that stop the flow of cash out of China, or are they very creative when it comes to that?
Oh, gosh, when policymakers start trying to do things, the intention may be good or well thought out, but the application sometimes doesn't work. So who knows whether it'll work or not. But what you do have is people are getting their money out of China and putting it, like places such as Vancouver. And that will be very hard to deny. You see some signs that their credit markets have become somewhat adverse lately. Now, how that treats with the flow of funds out, I don't know, but one always wants to look for credit markets in different parts of the world just to be alert to what's going on. I remember in 97, which was the Asian crisis, it started on July 1st with a problem in with the baht and what was that in the Philippines. Yeah, it started there and then spread to the Philippines, and then it spent all summer spreading through the rest of the world. And then finally in that September it hit the U.S. and they had one of the worst months in the corporate bond market in a decade. So one has to watch outlying credit markets, and of course China is interesting. Their stock market, which in 2015 went to the moon, apparently rocket assisted, and then ran out of fuel, but it had pushed off some tremendous technical readings. We were looking for a third set of upside exhaustions, and only 1 week of that came in, but it was enough to say that speculative bubble was ending. And what we have now is a couple of weeks ago, the Shanghai Stock Exchange got technically very overbought, so we can watch for a correction there. So what we look at around, you're seeing various hot sectors in the U.S. very overbought. Same thing, hot sectors in Canada, very overbought. And the gold sector was oversold, but we would look for that to test. So I think we're in here for a change. One of them would be the yield curve turning from steepening to flattening for a while, and that's possible. That would have a negative on U.S. and Canadian bank stocks. The other one that we're watching in the credit markets is the junk stuff, high yield, CCC rated, which corporate bonds are still declining in yield. When one of these trends get going, they really go for a long time. The one trend that looks like it could change in here is the curve, but as of yet, there is no change in the credit spreads, and we're uncertain as to when it would change, but we're watching it. So, going into the year end, Jim, it's a fabulous mix of very strong action and some, we'll put it this way, cautionary preliminary stuff in the spread market. So when you get a change, who knows? But oftentimes strong speculative moves going into December, January can reverse. We call it the turn of the year phenomenon. What was? In 1973, stock market had its high in early January. Then you had gold and silver. That crazy speculation blew out in January 20th of 1980. Tokyo Nikkei reached its success right in the last trading day of the year in 89. So we've got strong markets at the turn of a year when you can have, let's call it, a turn in the markets, and we'll watch and see if that happens.
Are we going to see a 20% correction like we saw last January, February?
Oh, no, that was a different market, Jim. That was the collapse of crude oil. And crude oil may get a little correction in here, but it could hold itself together into February. No, it would take, the chances of replicating that move are some ways down the road. Let's just be satisfied in calling for a correction on the hot stuff. Well, some of it's already started to correct.
Do we always try to see a big change when we go into the new year, or is that just human wishful thinking?
They've got the January effect and things like that. No, it's not reliable enough, but all I'm saying is that when you have good speculation into December, oftentimes it can set the absolute top or just a correction, and that's the part we're uncertain yet, whether this would be an absolute peak or just a correction. Let's call it for a significant correction.
Bob, don't go too crazy at New Year's Eve.
Oh, it's going to be a quiet one this year. We didn't even get organized to go out dining and dancing and drinking this year. I wonder if it's common sense or old age, but I'll let you know on that one.
Bob, thank you so much for all the special things you've done for us in the past year.
Well, we've had a good year together, and I'm looking forward to the same on the next year, the old 2017.
Bob, all the best.
Best to you then, Jim, and that look forward to next year.
My guest has been market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. If you have any questions for us, you can email us at info@howstreet.com. I'm Jim Goddard. Happy New Year.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.